Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Thursday, April 2nd, and my name is Raleigh White, and I'm coming to you from a cloudy and rainy day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics, beginning with his midday market analysis and his updated stock watch list for this afternoon. And then he's going to pivot and continue on his discussion on how he likes to trade the markets every day. He's going to share how he likes to convert market entry signals into options trades and which options he likes to select. He's going to also talk about how he likes to structure his directional trades based on an evaluation of the long-term trend, and then how he uses the relative strength and weakness scanner to find the best trades to focus on. And finally, folks, when Roger's looking at a stock, how does he select the best stock in a sector based also on relative strength and weakness? Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with his presentation. And also, folks, I've opened the chat room to everybody and we do have some ground rules. Please be kind and supportive in your posts. Also, always try to keep to the topic. No political discussions allowed whatsoever, and keep those side conversations to a minimum because all it does is interfere with the rest of us that are looking to focus on the education and the information that Roger's sharing with us. Because after all, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock Eastern Time, for Roger's must-watch pre-market briefing, you'll note that there were several key catalysts on tap we needed to be aware of. Right off the top, energy. West Texas crude was up 10% over $110 a barrel as we opened up, the room this morning at 8 o'clock, and it climbed as high as $114 before the open. On the international front, we saw that the euro stocks came in down 1.8%, and the Nikkei was down 2.4%. So we didn't have any positive headwinds, if you will, coming into our market at the open. As far as the mags were concerned, Nvidia and Tesla were both down 2%. On the chips front, SanDisk and Micron, SanDisk was, excuse me, I said plus 5%. What is the matter with me? SanDisk was minus 5% and Micron was minus 4%. Sorry for that typo. On the materials front, we saw that Newmont Mining was down 4% and FCX was down 3%. And then on the Fed front, we noted that we had trade balance information coming out, we had jobless claims coming out, and we have two FOMC speakers on tap that will be speaking during today's trading session. So for those of you wondering about why do we talk about catalysts, what does this mean? Why should you pay attention to it? Well, from Roger's perspective, he believes this. Any information that is known or will become known during today's trading session, that represents a volatility flashpoint, which means we just need to be aware of that as we consider placing trades today. That's the importance of these catalysts from a big picture perspective. Now, as it relates to Roger's pre-market stock watch list, you'll note here that there were 20 tickers that he gave us, 11 to the short side and 9 to the long side. Now, on the long side here, we'll see that we have Oxy here has an asterisk by it. And that means when Roger talked about this particular ticker, he said this is a nice A-line setup. And then for FSLY, you'll note that I put an underline there. He basically, when he was looking at this, he said, I really like this stock. So I try to capture those comments and play them back to you. But once again, encourage that. No, wait a minute, hold on. That's a test of the emergency alert system in Austin that just went off. Nothing real, just a test. Anyway, but anyway, what you need to know about this, folks, is that this a watch list. This is not a list of stocks that he is recommending that you guys take. All he's saying is that from his perspective, these stocks are setting up. And if they mature to the point that they become legitimate trades in his eyes, he's more than likely going to take those trades and post them in the trading pit or in one of his other premium trade services, alert services. Now, as far as Rogers' pre open analysis is concerned, we did note that the futures were down really on doubts of a quick resolution to the Iran war after President Trump's comments yesterday. So, from that perspective, once again, looks like it's going to drag on, and the markets responded. We did note that the put to call ratio was back to being unbalanced, with puts outweighing the calls, and the VIX was actually moving higher above the 26th level. We also noted that the SPY and the QQQ were down below resistance and sitting at key support levels. And this is what Roger was afraid could happen. He thought that yesterday's bounce might be a dead cat bounce, and that he expected, from a technical perspective, that there would be a move back into support. And if it breaks support, that would be an opportunity to potentially short the markets. As far as the trend is concerned, it continues to be bearish, with less than 48% of the S&P 500 and NASDAQ 100 stocks above the 200 moving average. And as far as short-term momentum is concerned, it also remains bearish, with less than 45% of the S&P 500 companies and the NASDAQ 100 stocks above the 20-day moving average. And that's as of the close of yesterday. Be interesting to see where it is today. Bottom line, from his perspective, he says, folks, we got to be careful. The market is highly volatile, and he recommends that you protect your account. And if you're looking to trade, trade half size. Don't trade full size, trade half size, because once again, these markets are very volatile and very whippy. He also said that, tomorrow's markets are closed for Good Friday. So today is kind of like a Friday, which means that Thursday afternoon, just like Friday afternoon, is really not a good time to trade, because once again, many of the big players are heading out for the long weekend. The only people on the hedge fund desk are junior people with not much power to do anything. And then you have those trading bots. So anyway, once again, be careful this afternoon. And he said also, keep an eye out for a positive admin spin. What he's talking about is he's pretty sure that the president is not happy with the way the markets have responded to his comments last night. And he wouldn't be a bit surprised if we see some communication come out, trying to moderate that, if you will. And once again, that could impact decisions you make in the market. So we're delighted to have you here today. Roger's put together a tremendous, excellent agenda. He's going to begin with the midday market analysis and his updated stock watch list. And then he's going to continue his discussion and share with us how he likes to trade the markets all day. And one of those things is he's going to talk about how he looks at his market entry signals and decides which type of option that he wants to trade. He's also going to talk about how he structures directional trades based on what the long-term trend is, and how he uses relative strength and weakness to find the best trading opportunities. And lastly, folks, and this is key, what's that little trick that he does to find the best stock in a sector that has relative strength or weakness? So if you have any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with his presentation. And also, remember, folks, that the chat is open to everyone. And remember, we have some ground rules. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever. Keep those side conversations to a minimum, and let's all focus on the education and the information that Roger's going to be sharing, because after all, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. And with that, let's say hi to the team. Hey there, Matt. Hey there, Roger. Happy Thursday. It's kind of like a Friday, right? Because the markets are closed tomorrow.
It's definitely kind of like a Friday, except we have the employment report tomorrow when the market's closed. I wish we did it. They did it today. It would have been so much better.
Yeah,
I mean,
that kind of surprised me.
yeah,
I don't know why it did. Maybe because the markets are closed. I just assumed the federal government was closed and we wouldn't see reports.
Exactly. Well, it's kind of like you're going to close the market. The federal government's closed. You're going to keep the market closed. The banks are going to be closed, but you're going to have a employment report. They should have just postponed it or moved it to Monday. But they never listen to anything I say. Why do they have consumer sentiment on Friday instead of on Tuesday after all the jobs? I mean, and see, the thing is, it wouldn't hurt them to change them around, but they don't think about the market. You know what I mean? They're thinking about data. They're thinking about people getting their information. They're not thinking about people. How this is useful for traders. Because the
Hmm.
consumer sentiment report after the employment report has about as much use as I don't even want to
I'm waiting for your analogy here, Roger.
a year old toilet paper that's been used. Okay, that's
Ah,
about the benefit of it. Okay,
oh my, there we
that's
go.
about as useless. I mean, who's going to look at consumer sentiment after the employment report? I mean, it doesn't
Don't
make
you
any.
know anybody there, Roger? Don't you know anybody? I
I
mean, just
do, I
pick up
do
the phone.
actually. I'll tell you something funny. I'll tell you something really, really funny. When I first started out many, many, many years ago, one of my first clients, and I'll never forget her. Her name was, she's probably passed away. She was probably like 80 years old back then. I'm going back 30 years. I'm going
Okay.
back a long time. I mean, uh, her name was Avi Painter. And she was I don't remember either Arizona or Nevada. This is 30 years ago.
Okay.
She was the consensus. She was in charge of the Consensus Bureau,
Okay.
which is very interesting, actually. And she was a commodity trader, and she was actually really good at what she did. And she and I became friends. And she used to have pull on these reports. She used to be on the advisory boards
Oh,
for all of
okay.
these reports. And I used to tell her this back then, and she tried. God knows she tried, and it just didn't do any good. So I actually did try to have someone change it because it didn't make any good. And yeah, she was such a nice lady. She was older woman. She smoked like a chimney. She had that. Hey Roger, what should I get? No, no, she did. She talked that way. It was the funniest thing. She was
Oh my.
adorable. I loved this woman. I loved her. I loved this woman. Avi Payne. I'll never forget her. What a
That's a
wonderful
great name, AV Painter. Yep.
AV Painter. Yeah, AV Painter. I'll never forget her. Anyways, all right. Good morning, everybody. Good afternoon. As you guys see, this market is something.
Hmm.
So let me. There's
Roger,
a
I mean, I'm a futures trader, so I'm watching crude, and crude looks like a patient that's going, in and out of a heart attack. I mean,
yeah.
that's how it is moved, all the way as low as 107, as high as 114, and of course, the E-mini S&P and the E-mini Dow and gold have been doing much of the same thing. So just wild,
Yeah, it
crazy.
is. It is wild. Now, just a few things I want to bring to your attention. Okay. So we're at the 8-day EMA. The fact that we opened down here and went up here is very, very. You see, folks. This is how I want to explain something to you, and I want to give you a little perspective here. Back in the day, I had a friend. I've lost contact with this guy. He was an amazing guy, and he used to be a marketer. He used to do banner ads. He used to make over $100 million a year. Uh, Companies used to hire him doing banner ads, and he had such a good sense of conversion and what would convert
Okay.
that he would basically companies would hire him and he would find a niche, a little sub niche. He would create a banner ad. He would put that banner ad in a place where people who wanted to buy something from that site would go to, and he would make like 50 cents every time they click. He was like a 50-50. The guy was making bank. He was a really, really wealthy guy. As a matter of fact, back in the day when I was starting out, he was the richest guy that I knew. That's how I met him. He was doing banner ads for me. He was very successful at what he did. And I just lost touch with him over the years. Again, this is going back many years. And one thing he taught me, he said, one because I used to teach him about the market and he used to teach me about marketing. And he said, one thing I could see a huge resemblance between what you're doing and what I'm doing. And I said, yeah, what is it? Because I don't see any resemblance. He said, we're getting information. We're getting information. He's like, even when I lose $50,000 on a promo, I don't look at it as losing. I get some information and I can use that
Oh, okay.
information somewhere else. And I said, that's a great way of looking at it. He said, and I'm sure market data sometimes even when you're not making money, it's giving you information. I said, yeah, that's all I'm doing is I'm collecting information all day long. And the market gave us a very, very important piece of information today. The market told us that even with all of this nasty news and even with the market being down 500 points, we were able to bounce back and go up to yesterday's level.
Right.
My friends, that's a very, very important piece of information. That means the market is starting to appraise this within its value, something that I said started happening last Thursday. Okay? Last Thursday. It's very important right now to make a distinction between the war and the overall market. It, how can I explain this to you? It's very important to make the distinction between the impact of the war and the rest of the market. Meaning, there's a market there, folks, outside of this war. You can't just blame everything on the war right now. It doesn't work that way. Okay. So every day, and I do mean this, every single day, the war is going to have less of an impact on this market. And there's just no two ways about it. And you could see right here, look, consumer cyclical, basic materials, but look at things that are up. Real estate is up. Real estate is up. Consumer defensive is up. There are some things that are starting to move, in the right direction. Now, even technology is not down today. It's flat. Anything lower than 1% is flat. Financials are not down today. Industrials are really not down today. There's nothing over 1% that's down right now. This is really good. This is a move in the right direction where you have the news, you have the worst case scenario. I mean, look, in my opinion, what our and I'm not saying anything nasty, and this is not political. This is like completely market. To say publicly, the war is going to be over in about 3 to 4 weeks, but I don't really care about the strait. That's about the worst thing you could say as far as the market is concerned, because the market doesn't care about the word, the war. The market cares about the last thing he said. You understand? Well, what did the market do? The market bounced really hard. The market is now telling us, "Hey, we'll figure it out. It's coming within our price." That's very, very important. And again, this is not a political comment. What I'm saying is the market is assimilating what our president is saying. That's a very good thing. That's a very positive thing. Also, and you guys know I'm going to show you this right now. If you look here, if you look at volatility, and I'm only using the screen because we see it in the morning, and I know you guys are used to seeing me use it. Look where volatility is.
Mm-hmm.
If you look at what the market did, and remember, this is what I was anticipating, and so far, that's what's working out. If you look at the market, we went all the way down here to this level, okay? Volatility is now near levels. We near these levels right here. We're in that gray area again. And we didn't go up here to the high. We didn't go to 30. We didn't go anywhere near this area. But even though the market did, volatility did not. That's very, very important. That's really, really important. I know that you're saying, yeah, but my stocks are underwater. I understand. But I'm explaining to you from the broad market perspective, this is a really good move in the right direction. Now, hypothetically speaking, and again, I don't predict the future, but hypothetically speaking, let's say that tomorrow or later today, I'm literally just making this up. This is like first thing, there's a bomb, Iran attacks America, or something like that, something that will not happen. But then that's a new catalyst. Right. That's something the market has not been appraising yet. But as long as we stay in this game that we're in right now, which I'm pretty sure we will, basically war in Iran, war between the straits not opening, worst case scenario, not opening for a while longer, the market is going to start assimilating this, and volatility is going to start dropping like it is already. Volatility doesn't stay elevated very long. Okay? It doesn't stay elevated very long. So, and because the markets do price things in pretty aggressively. So my point here is that this is a good sign, a good move in the right direction, guiding us the right way. So I like this. I like this. This is very, very positive. It's a step in the right direction. Even right here, you see this right here? See this price here? Let me show you. You see this bar right here, Raleigh?
Yeah.
Okay. Look at this bar, okay, and compare it to these bars.
Hmm.
This is, I call this very sheepish price action. There's not much here. There's a lot of uncertainty, a lot of wicks. This is not institutions pounding this market. This is institutions taking this market higher.
Yep.
This is institutional price action right here. This maybe institutional price action. This this is kakapupu. This is randomness to the downside on low
Yeah.
volume.
On
There's
low
not
volume. Yeah.
low
Yeah.
volume. There's not much here. So that's telling me the market is in fact starting to assimilate. Now, finally, I know I'm dragging. I think this is important for folks right now because I think folks need to understand and see what's going on. I think a lot of people are scared still because the VIX is still elevated, but we are moving in the right direction. Look at USO real quick. Yeah, USO is going up, but VIX, my friends,
It's moving lower. Yep.
yeah, yeah. This is not a huge move. Look, theoretically, we should be up here right now because of because USO has been what's driving this market. Not anymore. As of last Thursday. As of last Thursday. Okay. So remember, Friday it was Meta, and on Monday it was the chips, the memory chips. Okay. All right. With that said, let me now look at a few other things, and then we'll start getting into our analysis. Okay. So I like what I'm seeing here. I like what I'm seeing. Do we have any questions so far?
No, no, people just really like what you're saying here, Roger. They basically agree with everything that's being
Oh,
said.
I remember
Yep.
the last thing I wanted to say. Yeah, and again, folks, I'm not trying to I'm not trying to like sell a long opportunity for you or anything like that. I'm
Hmm.
just telling you how I see it. Here, remember I said this morning before the market opened, I said, oh, this number's going to come back down. We had 21 stocks. So here, context. Let me give you some context. Right here. Okay, we have 42 stocks making 1 month lows. This morning, we had 61 stocks
Hmm.
making, and remember, we were down 500 points on the Dow this morning. And I said this number's going to go really down. And you know what? It's not. It went up. It went up. So theoretically, what we need to see right now is the upside getting a little overextended and money coming into the upside. And also, what we should start seeing theoretically, of course, is we should start seeing semiconductors up here and technology up here and
Hmm.
industrial stocks up here. Exactly. This is exactly what I wanted to see. Because look, my friends, semiconductor stocks, technology stocks, Russell 2000, this is coming into today and now
Right.
today after a 500-point down move. Look, I'm very excited about this, as you could tell by my voice. Semiconductor, this is coming into today. This is this morning. Semiconductor, technology, home builders, Russell, consumer discretionary, QQQ, industrial. Everything here except for communication, right?
Yep.
A few hours later, this is now. 10 minute this is 10 minutes delayed. Semiconductors, communication, technology, industrial, QQQ,
Hmm.
Russell 2000. Folks, I don't own StockFetcher. This is not a global conspiracy. This is coming into today, and this is right now. Communication, semiconductor, technology, industrial, QQQ, Russell 2000. You
Right.
see you see a lot of this is now coming up. That, my friends, is the market giving the war the middle finger.
Yep. And it's interesting, a couple of comments in here, Roger, that came up with regard to oil pricing, and I'd appreciate your perspective. And that is this. It's like the president said, look, we don't need any oil from the Middle East. And he's right. We have the ability to meet our own demand. And so people are going, then why are our prices going
All
up?
right.
And what you have to understand is we pay the world price for crude. We don't get a regional deal.
All right. I'm going to say it finally because you've
Yeah.
asked me, and and
Yeah.
folks, I'm going to try to say this in the most unpolitical way possible. Our president, for better or worse, he has this idea that America is America. And I understand. I love this country more than anything in this world. I really do. I want the best for this country. The problem is that mentality went out the window about 30 years ago. We live in a global economy. Our president doesn't seem to want to get that through his head. If you do something to Europe, it impacts us negatively. It's one world. It's no longer a USA economy. Those days have been long gone. Long, long gone. Do you remember about 20 years ago when half of China was buying houses in the USA? We live in a global economy. You've got kids in Ukraine watching videos on YouTube. Folks, the days when Levi's was a USA economy was 50, 40 years ago. We live in a world economy. And a lot of economists try to explain this to our president, but he doesn't want to buy it. Now, whether you agree with him or not, I don't really care. We live financially, it's one big fat market. We're all in this together.
Mm-hmm.
We can't separate it. Yes, we have the bigger slice in all of it. Yes, of course we do. But it's just one big market. 30 years ago, you didn't have French people and people from Israel trading the S&P 500. Well, here we are, and now they do. And creating this isolation in the USA between us and it's us versus it doesn't do anybody any good. We get a lot of our money from it doesn't do good for our economy. It doesn't do good for people coming into America. It doesn't do good for anybody. It doesn't benefit anybody.
Right.
So I'm not going to change our president's mind, but hopefully I can change your mind and make you understand because you're interested in the stock market. The stock market is a global thing.
Mm-hmm.
Okay, global thing. So saying something like, oh, we don't need it. Yes, we do. We are the rest of the world. We need it like everybody else. Our oil, by the way, our oil is too good. It's too thick.
Yeah, it's heavy. It's heavy crude.
Too heavy. Yeah, I know this because my in-laws are lifelong. They were in the oil field their whole life, and they laugh at these things they see on TV. It cracks them up. It's just a lot of people don't really understand how the world works. Okay? We live in a global economy. 24-hour markets. Why do I always at night? Why do I always tell you guys, let's see how Europe and how Europe and Asia open up to see how we do. Man, you can't live in this world. And by the way, I've read things that our president has said 20, 30 years ago. He had the exact same outlook 30 years ago as he has now. But the problem is the world is not the same as it was 30 years ago. We can't have this absolute attitude anymore. We're the ones that are going to lose. Okay, all right, enough of that. I'm sorry, Rob.
No, appreciated your perspective because once again, I've had all of my professional career, I worked for a big oil production company. And so from that standpoint, once again, I can see simplistically they're going, well, we're self-sufficient. It doesn't take us much to get our crude. Why don't we pay one price? And when we export, they pay the world price. It doesn't work that way.
It doesn't work.
The companies that are making out well at this point in time are the oil companies because prices are high, driven by demand, but their costs haven't gone up. So they're making margins. And anyway, long story short.
Oh, and just on top of that, I want to say one more thing, okay? How much supply do you think ExxonMobil, Chevron, a lot of people don't know what I'm about to say either. And this is not political at all. This you guys are going to, I don't care what side of the fence you're on. You're going to love this, okay? Chevron, Mobil, all the oil companies. If you think that, how the prices are going up at the pump right now, right? Okay. That means demand, supply and demand, right? Well, what if I told you all that's complete bullshit? Mm-hmm. Do you know how much oil reserve they have? There is absolutely no need to raise prices at the pump. Do you think prices are going up at the pump right now? Because
Based on reduced inventory levels? No.
no,
Yeah.
no,
Yeah.
no. It's just all speculation. It's all speculation of where price is going to go, and they're speculating along with you and me. Do you really think Chevron right now has to pay twice as much for oil as they did 3 weeks ago?
Mm-mm.
Come on.
Big upside. Yep.
Come on. They're hedged to death. Folks, so again, when price of oil goes up, America suffers just like everybody else. That's all you need to know, okay? You've seen it. You've seen it. I'm not going to even explain it to you. So yeah, Raleigh, you understand it though. It's a global economy.
Yeah.
We live in a global economy, folks.
Mhm.
Welcome to the world.
Mhm.
Okay?
Absolutely.
All right.
Anyway,
All right. Yes,
thank you all for the question. I hope that cleared up some of the questions that were there. More like a PSA than anything else.
And I hope I didn't piss anyone off. That
No,
wasn't the point.
Hey, Roger, just call them like you see them, buddy.
Yeah, folks, this isn't, I'm a Republican, okay? So I'm just telling you, we live in a global economy, okay? We live in a global economy. All right. All right. All right.
All right, what else you got on the agenda today? Hey,
I'm glad I got that out of
what stocks are you
my-
looking at? You
All
got any
right,
stocks
all
on
right.
your
Thank you,
list?
Thank you. No, folks, one thing about me, I really do care about this. This isn't just a show for me. This
Right.
really is my life.
Not clickbait. Yep.
This is really, really my life. So I get involved in this. And I do this for a living. Okay, short stocks. Funny enough, this is my first short stock. It's already on my list. SE. All right. I really do care about this, folks. RCI, Rogers Communication. I don't know what's going on with this, but this is a very bearish signal right here. Not only is the stock breaking down, but it's breaking the 200-day moving average on volume. I guess earnings. Okay, so this is an earnings reaction. That's definitely something we want to pay attention to. And by the way, I like the market right now. I like how it's finding support here based on that whole sheepish thing that we talked about. Okay, KDP. Nice short stock. By the way, the fact that consumer staples are taking it under the chin is also bullish. Baba. I think somebody asked me about this stock last week when we were talking about different stocks. I really do like this stock. It's just very gappy. So if you're trading it, you don't give yourself like an eighth of a point stop loss. Be reasonable on this stock. But it's a good trending stock. Just it's very gappy because it trades here in the night session. SMR. That is a really nice trend. That's a nice trend right there. Close to the 8-day. Very nice trend. Not overextended. Qualcomm. Same thing. Now, a few folks were asking me about the weakest semiconductor stocks. That to me looks like it could be the weakest semiconductor stock. All right. FND. Again, home improvements. One thing about oil prices and the current scenario, even if the war finishes tomorrow, now this is something we're talking about. Folks, even if the war finishes tomorrow, the damage with interest rates in terms of pushing them back has been done. Our level of uncertainty has obviously increased. Powell said just on, I think 2 days ago that, we just don't know what's going to happen. And we don't know what's going to happen. Is it going to be over tomorrow? Is it going to be over for a month? I don't know. I have no idea. And either does anybody else, as far as I could tell right now. But we do know it's not going to be like the next year. It's going to be, because America does have the power to pull out, whenever they want to. So this is going to create a ripple effect in interest rate market. Maybe a small one, maybe a big one. Nobody knows, including myself, and I'm not going to try to guess. But what I will tell you is this. There's been a lot of home builders. A lot of home builders people are going to be backing away from home purchases for a little bit longer than they would have without this war at this point. That I could say pretty confidently. Well, that impacts this company directly. Okay? Because when people don't buy homes, They don't buy decorations. They don't buy floors. They don't buy roofing supplies. They don't buy home improvement stuff. And I think you don't need to be a stock market wizard to understand that. You know, this is a direct impact of that. So this is the worst. Do you remember what happened after World War II? There was a huge baby boomers. The whole people were buying houses, industrial revolution, blah 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 blah. This is the opposite of that.
Yeah, the invention of the suburb. Yep.
Yeah. The invention of the right. Thank you. The invention of this is the opposite of that. And again, wars do something to people's fear. They are like, oh, there's war. I'm going to buy a house. No, I'm going to wait till things are a little bit better. People do take things like that into account. And also oil prices, at the pump, if somebody was paying $3, my son, he called me a couple of weeks ago. He's like, Dad, I feel really guilty. I'm like, what do you feel guilty about? He's like, oil prices are $10 a gallon here, or not a gallon, whatever. He's like, but it equals $10 a gallon. I said, but you got to drive. I mean, you got to do, I know you're not going to be going like taking tours around Australia, but you got to do your thing. It's okay. It's fine. But this is a global problem and it's impacting people. So gas prices are also going to cause people not to stock up for things in their house for the time being. Consumer discretionary items, folks. People don't buy consumer discretionary items. That's an excellent look, by the way. That's an excellent look right there. I would not be buying this gap fill right there. Docs. Nice. I gave the stock to you down here, and all it's been doing is just going down since. Now, doesn't go down a lot, but it goes down. PODD. That's a really nice look. None of the stocks that I'm giving you to the downside are overextended, and every one of them has been going down before the war started. And the last couple of days, with this whole war's over, no, it's not, it hasn't had much of an impact on them. Okay. Yeah, a liter. That's it, a liter of gas. And last but not least, Root. Root. This is a financial company. I think they're like a credit card merchant, but they're not looking so good here.
And Roger, before we move on from the shorts, was SMR on your short list, or was that just an example you were giving?
No, that was on my short list. That's
okay,
my
got it.
That was after Baba, right after Baba.
Got you covered. And
yeah,
folks, just so that you know, I'm writing these down and I'll share them as soon as Roger's done with his longs.
Okay, cool. All right. And folks, once again, I don't have the chat open, but please don't take what I'm saying in a personal way. I'm just being truthful with you about the market. Okay, Johnson & Johnson, upside. Now we're moving to the upside. Johnson & Johnson. I still like this stock, We got out of it a few days ago. I still like it. Dell. That is a nice looking stock right now. Matt.
Yes, sir.
Make a note of what I just said, okay?
Mm-hmm.
About Dell. That's a very nice stock right now. GLW. That's a very nice stock right now. These are two stocks that I would be long in the pit right now if I wasn't long the stock that we currently have. No joke. No joke. APD. Nice. Eric, any kind of chemical product right now will obviously rally into this. CF, another one, same type of thing, resting very comfortably on the. Another one, Matt, you should consider taking a look at today is CF. Okay, I know you like that stock. That we've traded that stock before. WAB, I think Richie gave me this one. I think Richie might have given me this stock. I would like it.
What a guy!
Richie's great. I told him a year ago he's going to help be giving me stocks, and he's like, "No, I'm not." I'm like, "Yeah, you will." And now we're all day long. I'd like it a little bit above, like 260, but it's a very nice look. By the way, Raleigh, we took a nice winner this morning on another small cap. The small caps are really
And you did a scalp in Netflix too. You were
and
a
we did a
busy
scalp in
boy.
Netflix.
Yeah.
Yeah, and we did a scalp in Netflix. People were happy about that one too. Next one was FSLY. I still like this stock a lot. I actually regret not getting it today. You know what? It's actually right at the VWAP right now.
Yeah, you
Matt,
liked it this morning if
I
it
still like it.
moved the way you wanted it to. Yep.
Yeah, and it really is moving the way I want it to. I really like this stock right here. Matt, you may want to put it somewhere, okay? I mean, like right now, it's setting up really nice. FSLY, TSCM. That is a nice look right off the VWAP. I can tell my buddy here. All right. TSCM. Like that stock. Very nice. Sienna. The problem with this stock, now, this stock has a problem. And the problem is lately it's been getting really, really crazy wide spreads for some reason. We used to trade this stock all the time. And I've gotten like 5 setups on it in the last couple of days, in the last, not couple of days, in the last several weeks, in the last 3 to 4 weeks. But this stock has been giving me nothing but heartburn because the spreads have been wide, really, really wide. And it's hard. And every time we're like, okay, we're going to go long. We're like, I can't buy this thing. It's just like Grand Canyon. So I'm hoping that the spreads tighten up here, but it's a very nice stock for what it's worth. DOC. And by the way, every stock I'm giving you right now has been going up before the war started. Okay. This one too, Doc C doesn't look Doc N doesn't look bad either. They're internet company. If you want to host your website, that's a good company to use. Dar Restaurants. We've been talking about this stock since right here, and it's been just going straight up. AD. I thought we already did ADM. I thought we already did ADM, but maybe not.
Oh,
ADM.
we had ADP.
ADP.
ADM.
That I'm confused. ADP. Yeah. That's another one. That's another one of my confusions right there. ADP and ADM. Do not day trade this stock. Look at how wicky it is. It's very wicky. It means it gets slapped around all the time. New York Times. It's a very, very nice look, actually. Let me look at the options on this stock. Not a lot of liquidity here. It's a really nice look, actually. Yeah. Nice looking stock. And TS. It's the only energy stock that I wanted to give you because it looks like it's just moving very steadily and conservatively, and the war isn't really having that much of an impact of it in terms of minute by minute. That's my watch list, my friends.
All right. And I'm posting this for everybody here. And Roger, before we move on, just a quick comment right off the bat. Several people are going, Roger, this is great. Are you liking these as swing trades or day trades? And I can only assume you're asking that question because you're new here to the room. But Roger has explained in detail, you know, what makes a signal a potential swing trade or a day trade. Roger, can you give a short response to that?
Yeah, I can. As a matter of fact, I have a good example for you. FSLY. So you see how FSLY is trading right here near this level? The closer we're trading to this level, the more likely it would be a day trade. The closer we're trading to this yellow line, the more likely it would be a swing trade.
Right.
Why? When it's trading close to this yellow line, it means it's not overextended. See, this is not overextended. This is getting a little overextended in the short term. Now, if I'm day trading, and if I'm getting closer to this line, but I have volume, I'm okay with that. I'm okay with that.
Yep.
Okay.
But it's highly visual, folks. Here, you start asking questions like, well, how far does it need to be from the 8-day moving average and all that? And I know, Roger, you have programs that help you, quickly look and see if it's overextended or not. But largely, it's visual.
Well, Yeah, I mean, right here, this is 1.5 standard. Okay, so this line right here is what? See this right here? Hold on. See this right here? The ATR.
Mm-hmm.
It's 307. If you take this and times it by, this is the range, the volatility of the last 10 days. So on average, we move $3.07 per day over the last 10 days. Okay? Just say $3. Okay, so what's 150% of $3? It's $4.50, right?
Mm-hmm.
Okay. So we take $4.50 and we add it to 29.50. So let's just say it's 29.50, add another 50 cents, that's $33. It's right now at 33.28. It's overextended. So if the stock is trading more than 1.5 standard deviation away based on the 150% of the volatility. So what I'm looking at is this is the average price. The
Right.
8 days, the average. I'm looking to see if price is 150% beyond its average move. Does that make sense?
Yep.
So if they so look, folks, let me show you something. A stock goes between $100 and $110, okay? What's the average? 105, right? So the stock is just moving around 105, 105. And at certain times, it'll go to a certain level that's more than 100% beyond its volatility. That means it's beyond random, right? So I want to know anytime it's beyond random. If it's beyond random, I'm going to take profits or I'm going to look to get into a day trade if there's volume backing it up. Okay? So this is the 8-day EMA, and that's 150% of the 10-day ATR away from the 8-day, and this is below. So all you would do, you could do this in your head. You take the 10-day ATR, you multiply it by 150, and don't nickel and dime yourself. Just round numbers, you know.
Yeah.
So this is $3, right? $3.07. It's $3.60. Okay. Yeah, and so that's the average. This is 150% below, and this is 150% above the average price based on its own volatility.
Yep.
Okay. Okay.
And Roger, I just shared that formula with everybody here in the chat so they can have that. You can plot that yourself, folks.
Yeah. Here's the formula for it right here. 8-day moving average minus the 1.5 ATR of the 10-day. It's right there. Right there. So this is the low and that's the high. And I know that anytime price is coming up here, that we're 150% beyond the average of the last 8 days, which means the price will probably revert back unless there's volume. So if I'm looking right now and I'm seeing high volume, and I could see that right here. See, there's nothing white here. White would be high volume. There's nothing white here. But if this was white right now, see how white comes up and yellow, I don't have any yellow. Yeah, I do. Yellow's right here. You can see yellow. Yellow means downside volume and white means upside volume. But I really love this setup right here. This is a great setup. I wish Matt listened to me and actually took it and put it in one of our programs. Did you do it, Matt?
Did not yet.
It's really a good one, Matt. It's right at the VWAP right now. It's a nice setup.
A little extended on the daily.
It is. It is a little extended on the daily. You're right. It is. It is. But it's been extended on.
It has.
Yeah. You're right. It is. It is a little extended on the daily. A little bit, not too much, but a little bit. Like we're right at that threshold right now.
Also, the other thing I don't like about it,
Mm-hmm.
for it being extended,
Yes.
it's a low price stock with a huge ATR. So when it pulls back,
it's going to pull back.
Then the range strengths, then your option is.
I should leave this more for the pit type trades.
Yeah.
More of a pit. That's why we have the pit, so I could do trades like this and not bother him with my shenanigans. All right. Okay. So let me talk a little bit about, now that we answered this question, let me talk a little bit more about the pit. Now, one of the biggest questions people had in the pit was about options. Options. A lot of people did not understand debit spread example. So I'm going to do a debit spread example. Let's do Apple. Apple, everybody understands Apple, right? Nice, simple stock, easy to remember, Apple. Okay. And by the way, I am a little bullish on. I'm starting to get a little bullish on Apple. Matt, can you check to see if the options tighten? If we can do that?
Yeah, I'll look.
Full put thing. Okay. 1 second. Yeah. Market action, price action is just something. Are you still long, Matt?
Mm-hmm.
Good. All right. All right. So let me just start off with, let's say that I say go long in the pit. Let's say I say go long Apple. Okay. That's what I would say. Go long Apple. And I would give you a price reference if we got filled. I'm cheap that way. So you go to Apple. Now, Raleigh, do you mind posting our rule of thumb so they have it on the sheet while I'm going through this?
Exactly. You're looking for just for spreads?
No, you could put the whole thing there.
Okay. Yep.
The little 4-line thing that you.
Yep. Be glad to
I
do
don't know if
that.
you have a cut and paste format
I
of it.
do. It's
Okay,
coming
good. Yeah.
right now. Here
So
we
let's
go.
just follow our rules. Okay. Let's just kind of follow our rules and see where it leads us. Okay. So what's my rule? 4 to 8 days out, right? 4 to 8 days out for a day trade, because sometimes these day trades last a couple of days, right? And if it's a swing, 4 to 6 weeks out. Delta 0.70. So let's just start there. And Raleigh's giving you my complete rules. Now I'm giving you literally the rules that I use for my options in the pit. So let's just kind of go there real quick, okay? So, okay, Roger said to go 4 days out, 4 to 8 days out, delta 0.70. What's the closest to 0.70? It doesn't have to be 70. It's between 65 and 75, so I say 70, but it's the closest to 70. So 67 right there, nice and tight, only $3.35. Well, Roger, my account's a little tight. You told me that I could do this for less than $250, and I want to hold you to it. So how far out do you go, Richie? Just out of curiosity. So here, 4 days out. So 252. But let's go to a 0.50 delta. Right here, 0.50 delta. Just like Raleigh said, start with a 0.50 delta when you're doing a debit spread. Here it is, 255, closest to 0.50. And let's go one out. Now, we want to spend less than $2.50. I mean, excuse me, less than $1.25. How did I come up with that $1.25? I took the difference between the two strike prices, right? Okay. Difference between two strike prices, and I divided it in half. What's the difference between 255 and 257.50? It's $2.50. What's half of that? $1.25. Gotcha.
Yep.
Okay.
So we just made it that much more affordable.
Well, we don't know how much
risk.
We don't know how much it costs yet. We just know what the most we can pay. It's $1.25.
Yeah, the most we can pay, right?
Now let's see how much it's going to cost us. So $1.83 we spend, and we take in 82 cents to offset. Our cost is $1.01. So, is $1.01 less than $1.25? Yes.
Yes.
We have liftoff. But let's say you're a conservative beast like Richie, and you like to go longer term. You go to rule number 2. Let's say I tell you it's a swing trade. You go 4 to 6 weeks out. Oh, 36 days right here or right here. And you go to the 70 delta, you pay $1,600. Okay. Or you go right here to 0.50, 255, you pay 975, and you offset it with this one. Let's see how much this thing is going to cost us. The next one's $5. What's the difference between 255 and 260, folks? $5. What's half of $5? It's $2.50, right? Right. So the most we could spend is $2.50. Now let's see how much the spread costs us. Right here, 13, 250, 255. Right here, sorry, 255, 260. right here, 1050 versus 773. This is what, let's see, that's more than 250. That's more than 250. Yeah, it is more than 250. So this is no good. So let's try this. Let's go 255 to 265. What's the spread there? $10. What's half of $10? $5. Okay, the most we could spend is $5. The 255 is 10.45 and 265 is 5.72. That, my friends, is less than $5. That's like $4 and it's like $5. I'm good to go. I can do that spread. Or just go 0.73 delta and spend $1,675. Your choice. Your choice. The formula for that is exactly what Raleigh just wrote out. Okay? Okay? So if we're day trading 4 to 8 days out, delta 0.70 or a spread starting with a delta of 0.50, not to, and don't spend more than 50% of the spread. The spread is right here, the difference between these two strike prices. So find your delta, find your delta, go to the left, look at the next strike price, divide, subtract the lower one from the higher one, divide that in half, and that's the most you can pay for the spread. Okay? So $5. $5 means we can't pay more than $250. Oh, $9.75, $6.75. It's more than $250. We can't, it's too much. See that? It's not hard. Most importantly, it's the same thing every day on this show. We do the same thing. Right? That's all you got to do. That's all you got to do. It's not that difficult. It's not that difficult. It's easy. You could do it in your sleep. Okay. Matt, don't overstay your welcome here. Market's getting really choppy here. Okay? We need to get a t-shirt that says don't overstay your welcome, Matt. Right? That would be funny.
He's a welcome, Matt?
No.
Never mind.
You that was a good one. All right. That was a good one. Okay, so how about I do another one, okay? Would you guys want me to do another one just to show you another example?
Yeah, and Roger, I don't know if you can accommodate this request or not, but a number of people have said, this is great. I'm seeing this on TC2000, but I have TOS. I have Thinkorswim. You know,
do it on Thinkorswim. I mean,
no,
God.
when it comes, I don't know if you have the ability to do it that way, then people could see it, but
I can, but I don't. I mean, but I don't like to use TC. I mean, can't they just go to Active Trader or Trade right here? Okay, here. Go to Trade. Okay, you want me to do it here? I'll do it here. All right. Apple right here. Here's Apple. Here's your TC. Here's our option strike prices. Let's see, how far do we want to go? April 8th. Where's my delta? I got to add the delta column here. I got to add.
Okay, Roger, do what's comfortable for you, guys.
Yeah,
you can do this on any platform.
Your brother can show them. Your brother can show them how to do this in 5 minutes on Thinkorswim.
Yeah,
my theory is this:
customer service live.
Yeah, he'll show you how to do it on TradingView. You can go on YouTube. How to find options on? It's not okay. Let me explain something to you.
Hey,
but here, no. But this is important. I want people to understand this. If you know how to do this, if you know what you're doing it on another platform will take you 3 minutes. If you don't know what you're doing, you'll never be able to do it on another platform. Do you see the point I'm making? See, I could do this on any platform in the world because I know what I'm looking for. If you know what to look for, you will learn how to do it on any platform. So the key here is learn what I'm looking for. Okay? Would you guys like me to do it on another
Yeah, if you could walk through another ticker, that would be super.
Okay. Well, how about Microsoft? Okay, Microsoft. Why not Microsoft? Okay, we'll do calls on Microsoft. Let's say that I'm bullish on Microsoft. I give you a signal that says go long. Okay, all right. Let's go to our 4 days here. Let's go to move up my strike prices. So let's say we're day trading this thing. You can go 4 days out, or you can go 6 days out, or you can go 8 days out. It's your choice. Your choice. 4 to 8 days out. Now, most stocks will not give you this many choices. Remember, Microsoft is a mag, so it has expirations every other day now. But So let's just go 6 days out. Shits and giggles. 75 delta right here, 365, $8, 800. You would pay about $850 for this call that expires in 6 days. Okay, so just remember that 800 something dollars. Now let's try the other way. Let's go to delta of 0.50. Let's start here with 4.46, 372.50. How much is this? 428. Okay. What's the next strike price? 375. What if I subtract this from this? It's $2.50. And then what if I divide it in half? It'll be $1.25. That means I can't spend more than $1.25. So what is this? $4.28. This is 312. This whole thing costs me $1.16. Is $1.16 less than $1.25? Yes,
Absolutely.
It is.
Yep.
Do you want to spend $850 or do you want to spend $1.16? $116. It's a swing trade. Okay, let's make it a swing trade. We go 43 days out, 0.68 delta, $2,400. Roger, you lied to me. You're a bad man. I don't trust you anymore. You told me I'm going to do cheap trades and you're giving me a trade for $2,400. No, I'm not. You're just not listening. Okay. You go to 0.50, you go to 0.53. Let's just say you start right here. It's $19, okay? It's got good liquidity. What's this? 370. What's the difference between this and the next strike price? It's $5. What if you subtract 375, 370? What do you get? You get $5. What do you divide it in half? You get $2.50. That's the most we can spend. Okay? How much is this? Well, this one, it's going about 19, and this is going for about 1650. It's a little more than 250, so no good. Let's move on. How about let's do the next strike price, 370 versus 380. What's the difference between these two? It's $10. What if you divide $10 in half? You get $5. That's the most you could spend on your spread. Okay, $19, $14. Hey, it's about, $14.50. So it's about $4.85, $4.90. It's below $5. Mazel tov. So you don't have to spend $2,000. You could spend $500. Okay? And I think everybody understands that. And folks, you know what? If you don't understand it, there's a 45-minute YouTube video that just recorded everything we just did. And you guys can rewatch it and you guys can watch it and rewatch it so many times. By the way, I'm sharing a full 22-inch monitor. So you should be able to adjust it on your computer. All right. Any questions before we move on to the next segment of my show?
Yeah, clarification question here
Yes.
From a few folks, and this is Graciela put it. She said, "Hey, Raj, from previous instructions, I was doing 4 to 8 days out when doing spreads, even for swings.
Yeah,
It's
that's
on
okay.
So do I have to go the same expiration as swings on 70 deltas, or can you please clarify that?"
First of all, when you're talking about spreads, there's no 70 delta. It's 0.50 delta.
It's 0.50. Yep.
There's no 70 delta when it comes to spreads. It's only 0.50. 0.70 is when you're doing individual stocks. Second of all, what I told folks is this. I said to folks that a debit spread that expires in 4 days or 5 days is going to be very, very cheap. So sometimes it's best just to buy that trade because I close out some trades, even as swing trades over 2 days. And if it expires or if it decays, just offset it and then roll into the next one and roll into. What I found is that people that do that still end up paying less money than they do for a trade that expires in 6 weeks. So yes, that's a very viable strategy. And that's a strategy that I recommend because the odds are that I'm going to be out of, if you look at my numbers in the pit, I'm out of most trades in 24 hours, 48 hours, 36 hours. They don't linger very, very much. I mean, sometimes they do maybe like 5 trades, but the 450 others, they didn't. So it's not a bad idea at all. And also sometimes, and that was a great question. Sometimes here's the other, and your return will be much higher. Your return will be much higher, and your spreads will be much tighter because liquidity on options that expire in 5 days is much better than in options that expire in 45 days. So yes, it is not a bad idea. It is not a bad idea. And Richie, by the way, that's something you should, when you're doing your next trade, just do an A and B test, like paper trade the short term, so you could see the difference. I think based on your style of trading, Richie, especially in this market when we're not waiting for long moves, it may be better. When we're in a directional market and we can be patient and really get that ATR, get those big gains, and we can get our target, I think 4 to 6 weeks makes sense. But when you're in a situation like we are right now, it's like hurry up, grab and go. I think it may be best to use those shorter term options because your leverage, your gear, your leverage is going to be much higher, and even if your win rate is lower, it's going to offset. So, folks, let me just any other questions, Raleigh, before we?
No, I think those are the key ones. And Roger, we're right up at 1 o'clock at this point in time. So
yes, yeah, that's exactly why I'm moving on. I thought this was a great session. I thought we
no,
covered.
incredible session. And frankly, folks, thank you so much for your questions and rewinding to the beginning, talking about, the fact that we live in a global economy. We're part of a global market. Just a great thread of discussion. So, folks, before we go forward, a lot of people are saying, where can I watch this again? And I just posted
Oh,
that you have a
thank you.
couple of options here when it comes to watching a replay. You can go to Roger's YouTube channel. Okay, and you can see it there, or we do have a brand new Vimeo library, and you can see our morning and VIP sessions that are posted there. Something else I want to share with you, because this is kind of brand new. Let me go ahead and grab this. Is that internally here at the Trading Pub, we have created a brand new options training course. And I just posted it. There's an options edu portal, and this was put together by some of the people of DTI. Adam Mowry and the rest of the team put this together because we have a lot of people, that are new to options, and they ask a lot of, basic questions about options. And the reason for this course is to basically, it's self-paced, and we cover a number of factors about that. And so, Roger, you shared that for the first time this morning in the morning show, and I grabbed it, took a look at it, and I'm impressed with the education that's there. So none of this, this is good basic stuff. And to a certain degree, Roger works best if he can count on some level of knowledge
Yeah,
with the folks that
yeah.
are here, because this is not a show just focused on newbie. We have to work with a number of people, but some of the basics are there, and please take advantage of that. So for the next section, folks, if you are on YouTube, please come over to Zoom, because we're going to stop the stream to Zoom for the second half of this presentation. And I also want to let you know that Roger is going to be turning off the chat so that he can focus on the presentation. But I am going to be watching the chat, and I'll answer any questions that you have, and any that I can't, I will go ahead and save those for Roger, and I'll give them to I give those to him during our Q&A session. Okay, Roger, take it away, my friend.
Thank you, sir. 1 second. Okay, perfect. All right, folks.